Ladies and gentlemen, please put on your protective eyewear because this rocket is leaving the station. For real though, a quick round of applause because the market just hit a new all-time high. What an exciting time to be a degenerate trader. In this video, I'm gonna break down how in one day I made $6.2 thousand. I wanna give you a quick rundown of everything that happened in the economy and the market today, and arguably most importantly, I wanna give you a heads up of what to pay attention to in the short term because I have a sneaky suspicion, my spidey senses are tingling that we're about to get even larger, more volatile moves, so I hope you are buckled up. Without further ado, let's rock and roll. By the time the world's largest casino closed today, Thursday, March the 7th, things were extraordinarily green. S&P 500 jumps 1% for fresh closing record. Nasdaq pops 1.5% to touch an all-time high. Obviously, the bull camp is over exuberant, and I hope you took advantage of it because I know I definitely did. Let's take a look at the daily DGen Report, basically what I personally traded today. As you can see, I locked in $6.7 thousand before fees, which ended up being roughly about $6.3 thousand after fees. How did I do it? Well, I have a cat. My cat's name is Piper. Piper happens to be an excellent trader, encoder, and really just a data analyst for the market. So she's created a system and she was fortunate enough to share it with me, or I should say I was fortunate enough to have her and have her share it with me. But around 10:10 in the morning, Piper said, hey, I'm bullish with a 5 out of 5 confidence, gave some suggested plays of a SPY put credit spread, a Q put credit spread, but I ended up trading something a little bit different. I like to trade SPX instead of SPY just because I think it's better to trade European style contracts instead of American, but that's not really the purpose of this video. Let me better explain what happened. When the market opened, things were good. We had a nice gap up. Everyone we knew we were within spitting distance of an all-time high, and I was looking for exactly this right here. A little bit of sideways consolidation, and then out of nowhere, a pop. Right around 10:10, that's exactly when Piper fired up. So I decided to sell some put credit spreads roughly in the realm of right here, 20, 25. And then when it got really exciting, I doubled, tripled down. We kept going. And as we got all the way up to 5,150, that was a full ATR move. And I happen to know when we have a full ATR move, the chance of us being above the opening value at close on that day is in the realm of 90-ish%. So I ended up selling even more premium right around the opening value, around 5,135. Those were my trades right here. And by the time I scaled out slowly but surely to keep my risk in check, I ended up locking in about 6.7K. Once again, 6.2 after fees. Then you could see on the week from Monday to now Thursday, up 16.6 thousand on the account. Now, obviously, I don't want to bore you with the nitty gritty details of the math and the stats and the advanced option strategy in this video. But if this is something that interests you, if you're like, dude, I want to do that. You're talking about math, stats, none of this BS gut feel type of stuff. That's exactly what the Goonie Discord is for. So if that interests you, sign up. It's completely free. When you're signing up, use the code Goonie, and that's how you get the free month just for anyone who's interested. Now, moving on, you might be thinking, why was there so much craziness? Why was there so much bullishness? Why does the market just seemingly have a ticket on a rocket ship that is exploding to the stratosphere? Well, in the short term, the answer is Powell says the Fed is not far from the point of cutting interest rates. That got the market very excited because we now might be moving from a tight monetary policy to a loose monetary policy, and this was the golden question of the entire trading year. This entire calendar year, if you believe in the Gregorian calendars, when are we going to start cutting the Fed fund rate? And with Powell's commentary today to the Senate, it seems like it might be sooner rather than later. This might sound crazy. That was actually not even close to the most exciting thing said during the testimony today. I swear, right hand up to God, as you're about to see, the guy in control of our money printer was asked about his personal adult-like relationships, if you know what I'm saying. But first, before we get to that, Fed is not far from the confidence needed to cut rates, according to Powell. Here's what he said early this morning.
Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is, if what we expect and what we're seeing is continued strong growth, a strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I know there were a lot of if, ands, and buts in that particular statement, but that's not what the market cared about. The market cared about those few words that sounded like he might not be so hawkish in the near term, and we went rippity skippity doo-dah. Now, just so you know, don't forget, March the 20th, we are going to have another FOMC meeting. As of right now, the market is saying there's a 95% chance that at the March meeting, they don't change anything to the Fed fund rate. But what is changing is later down the line, we're seeing an increase in odds of cutting odds then. So that's exactly some of the quantifiable measures we could see about the market. But I know with that setup right there, I don't want to bury the lead on you. I want to give you the juicy things that I cannot believe were stated on national government TV this morning. This happened today. Senator John Kennedy. This is directly to Jerome Powell. When I heard this, my jaw was on the floor.
A former female employee of the FDIC allegedly recalled her male colleagues saying women needed to use to get ahead at the FDIC.
I do not recall that.
This is getting spicy.
Did you read the article in which a female risk management examiner during a lunch with a male examiner, and he complained to her about his marriage, allegedly, telling her he wasn't getting enough. He allegedly said, obviously, if I walked into this office and you were naked, I'd you right here, end quote.
I do not remember that, and I think
what is going on right now?
Do you remember the article about Mr. Randall Ditch, a supervisory examiner in Denver? Allegedly, Mr. Ditch had urged the woman to not, quote, be a close quote, and drink a shot of whiskey during work hours, the records show.
Do not recollect that.
Some hard-hitting questions about the economy. This is real. I cannot believe it. Now, obviously, with all this insanity, a lot of bullishness, a lot of comedy, you might be thinking, what should I be paying attention to next? And there's three phases. I would say this evening, depending on when you're watching this video, pay attention to Broadcom. Broadcom is a top 15 company in this world, and it's in the world of NVIDIA, AMD, SMCI, Micron, Intel. It's a semiconductor, which is all the rage right now. AI, data centers, crypto itself. This is the hot industry, and one of the biggest players, technically the second biggest player, is reporting tonight. So in the short term, that is something you definitely should be paying attention to, especially if you enjoy trading tech. A little bit after that, Biden, who happens to be the president of the United States, the world's most powerful man. He's giving his State of the Union address at 9 p.m. ET. When does Biden's State of the Union for 2024 start and end tonight? Key times to know. I told you, 9 p.m. ET. Pay attention because he might be saying something about the economy that has implications on what's inflation, Bidenomics, this, that, the other thing. So another thing to pay attention to, but it doesn't stop there. An hour before the market opens tomorrow to conclude the week, the first full week of trading in March, we not only get the unemployment report, we get the non-farm payrolls, and we get the average hourly earnings, once again, all at 8:30 a.m. ET. So between the time I'm filming this video and market open tomorrow, we have important earnings reports, we have important State of the Union from the President of the United States, and then we have important macroeconomic reports an hour before the market opens. All of these things will have clear implications on the overall economy, the overall stock market, and most likely whatever you decide to degenerately trade tomorrow. Very, very quickly, I want to give you a little bit of an insight to the things I'm particularly paying attention to. I'm not by any means saying these are the only things to pay attention to, but I think it's things that should at least be on your watch list. First of all, the overall market, the S&P 500 clocking in a new all-time high. 3 days in a row, we've had an up range, higher highs, higher lows. This is generally very bullish. And right now, without knowing the results of those three things that I just called out, my knee-jerk reaction would be to, yes, continue this bullishness. If you look at the tech sector, also clocking in a new all-time high. Once again, 3 up range days, higher highs, higher lows. Bullishness begets bullishness. Gold, the commodity, hit a new all-time high today, which tells you how much people are really feeling about the economy. Anyway, gold new all-time high. Digital gold, not a new all-time high, but being very, very bullish after this recent pullback. So I wouldn't be surprised if we see a new high within the coming days on BTC. Meta, new all-time high. We were talking about semiconductors. Nvidia, new all-time high. AMD, not a new all-time high, but hit one yesterday. SMCI, similar situation, very, very close, but technically clocked in a new high yesterday. That's a lot of bullishness. Across the board, there's a lot of things to be excited about, but I do want to be a little bit more balanced here and let you know Apple looks horrible. After breaking down for a myriad of reasons, the technical price action, not good. If this thing cannot save itself at 165, look out below. And in a similar situation, we have Tesla that almost had a full-on legitimate breakdown at 175, but was able to save itself. So I'm either looking for a fake out bounce or a fake out breakdown. Something's going on here, but I think in the very, very short time, there's going to be an actionable trade on Tesla. So those are just some of the quick things that I want to call out and bring to your attention. Now, if you're curious about all of this stuff, the major things to pay attention to, what matters, what doesn't matter, every single weekend you could get a free newsletter email from me right to your email inbox. I break down the week, the things to pay attention to in the upcoming week, all the major macroeconomic events, all the upcoming earnings. I highlight the ones that I think you should care about. And probably most importantly, I give you seasonality. I do want to let you know that historically, this day, Friday, March the 8th, has favored the bears. Now you can see over the past 25 years, for about 20 of it, it was a very neutral day, but over the past couple of years, it has strongly favored the bears. The bulls have actually won this day 56% of the time, but the 44% of the time that the bears win, they win it at a larger size. So yes, the seasonality is leaning bearish. It's not the most bearish day we've ever seen, but the past couple of years have clearly tilted it in the favor of the bears. Just want you to know so you're a little bit prepared to conclude the week. Overall, these are some exciting times. The market is rippity-skippity doodah to the upside. I hope you are making your bag. And obviously, if you want to join up with the best trading community, sign up for the Goonie Discord. The link is below. The first month, 100% free if you use the code Goonie. Let me know if you enjoy these types of video breakdowns in a comment below. I'll catch you in the next one. Peace out.